In this video, I'm going to show you why seasonality effects on oil and also current state of crude inventories is predicting what the oil prices will do in the next 3 to 4 months. Good day, this is Sajad. I hope you are doing well. So we're going to have a look at a few news articles. Also, we're going to concentrate today on crude oil inventories before we get on to the USOIL chart. So let's have a look at inventories first. Now, this is very interesting. What I'm interested here in this chart, this is a 5-year chart, is any type of buildup in crude oil inventories, because that suggests that there's less demand for crude oil. Now, if you remember, in the EU at the moment, quite a few of the major countries are going into lockdowns. Not quite the same as what we saw in March, but not dissimilar either. So we would expect there to be less demand. But what we're looking out for here on this particular chart is what happened here in March. Let me just get this onto a yearly chart. You can very clearly see here at the beginning of April, sudden massive increase in buildup that just continued throughout the month of April. And that was one of the big reasons for the oil price crash that we saw. Now, what we're wondering here is if this is the beginning again of a massive buildup like this. That's something you have to watch out for. Now, generally, supply has been cut anyway. We know that. However, these oil producing countries still need to make money. So I imagine supply won't be cut that dramatically. So I think we will definitely see a buildup, just not as extreme as the case in April of this year. And in terms of numbers, you can see here almost 15 to 20 million barrel excess week by week during April. And things were fine during summer, but recently that is massive. So that 4.3 million barrels, that's the largest excess we've had since, I'm going way back here to 1 week in July. Well, a couple of weeks in July. So that is significant. So it'll be very interesting to see this week what happens on November the 4th in terms of these numbers. When I was covering oil prices back late summer, I did talk about seasonality, which is important also. We are going into the months of November and December, and this chart nicely illustrates the increase in demand generally during the summer period, as also reflected by the price, but generally the lower demand. And you can see here that November and December tend to be slow. There tends to be a little bounce towards the end of December with the Christmas rush, but then January and February are very quiet as well. So we need to keep these in mind when we're looking at the price of oil over the next, say, 3 or 4 months. This is a chart over 30 years describing crude oil seasonality. This is important for us to be aware of as well. There is a bit of a pickup because of heating season going into winter, and there is a temporary spike. So it looks like from here, the worst months actually tend to be February. If you've been enjoying the regular updates, please click the like button and comment below. It really helps me out here on YouTube. So what are we seeing in the headlines? Well, obviously mention of the lockdowns, which is expected, but also Libya spooks the market. So forecasts suggesting oil demand could drop as low as 88 to 89 million barrels a day, as compared to 100 million barrels at this time of year, which might be considered average. Now, we've got the election looming as well, and a prediction here, this article is if Joe Biden wins, that could boost oil because of expectation of more stimulus. And this is the concern from Libya. The state-run National Oil Corporation plans to increase output to 1.6 million barrels per day. We also see news saying that oil traders believe this is a mere speed bump with regards to oil prices, what's going on in Europe at the moment with the lockdowns. So what they were basically citing there is the fact that the inventories, the supply also fell by a rate of 2 million barrels a day in September and October. And to give you an idea of how important Europe is, the consumption is around 15 million barrels per day average. Generally. So certainly significant with regards to overall consumption of oil per day. So let's get on to the US oil chart. And first of all, we're going to start with the daily chart. One thing I want you to know when we look back left on the chart is this region here. So between these two peaks, this was a sideways complex correction. However, look at the time frame. This began in April 2019 and ended in January 2020. So that sideways action lasted around 8 months. And that can certainly happen with the price of oil. So it's something to be aware of. We could easily fall into that again. But what I'm interested in is after that impulse down, that initial impulse, we saw all of that sideways action, and then we had the massive fall. So we had an initial fall in January, February, when we know, I've just shown you on the charts, so generally demand tends to be low in those months anyway. So that's no surprise that we were towards the bottom end of the channel. But then that's when the pandemic hit, and there were obviously massive lockdowns being announced. And we have to look at the chart and learn from it to see what could potentially happen now. So this was explained by the lockdowns, then we had some correction, and then the next move down was actually explained by the increase in demand. So that's demand, this is lockdown, and the initial move down here was seasonality. So you've got three things there: seasonality, the announcement of lockdowns, and the sudden worry about demand, whilst the supply, by the way, whilst the supply was still high. But the difference now is we know the supply is low anyway, but they can't keep it extremely low because of revenue. So I don't think they're going to get back to the agreements that were made late April, early May. Seasonality is an issue, but we should see a little bit of a spike back in December. That could be a correction upwards, but then in January or February, that's where I think we could see the price bottom out in oil. And then possibly as we emerge out of these secondary lockdowns for the second wave, that's where we could see a massive rally in the price of oil, because if supply stays low but demand suddenly surges and continues to surge, that's where we could go in the opposite direction. And supply is going to remain low now because we've had a lot of companies close down. So this is kind of my idea involving the macro picture. So let me know what you think in the comment section below. So let's get on to the technical analysis now. First, on the daily, in terms of the general moving averages, so these are the simple moving averages, you can see that we remain under the 200 MA, and we had a bit of a bullish crossover there, but that failed, and it now looks like we're turning back down. And you can see that by the slope of the curve as well. As you can see, both lines sloping downwards. On the RSI, we're nearly in oversold territory. On the faster moving EMAs, we can also see we were sideways for a while, but now the red line and the orange line, which are the faster ones, they're both below the blue slower moving average and pointing downwards, with price action below as well. On the MACD, a lack of momentum either direction at the moment, but importantly, we failed to get back into positive above the zero line, and we wait and see if we develop further downside momentum. So let's have a look at the structure. The way I'm currently looking at this is a completion of a wave 1 here, and we're now going to complete a larger wave 2 before we then get that massive rally, which I think will happen in 2021. And the problem with oil is this correction, it can take several weeks to form. So where will price finally settle if we continue to move down? That's the question here. So this looks like it could be a larger ABC. Level I'm looking at, looking left here, and again, these aren't like specific numbers, they're usually areas of potential support, is here, because if we look left at recent price action, that's where we got some resistance, and that's where price found some support. So around the $30 region, I would be interested to see what price does if indeed we do slowly grind further lower with the effects of the lockdowns. The one in the UK, for example, is only announced from Thursday. It hasn't even started yet, but in anticipation of that, we've obviously had a move down in the price of oil. Now, could a quick correction have completed already? That's the other thing to discuss. In that scenario, what we sometimes see is a simple zigzag pattern complete down. And one of the ways you can pick up on that is if there's a 1-to-1 ratio between wave A and wave C. There are other ratios as well, but that's the one I look out for just to make sure I don't get caught out. So here from this high, so let me just zoom in here. So from this high we saw at 43.74, moving to this swing low 36.15, and then pulling the fib extension back above 41.89. You can see the 1-to-1 ratio was 31.28. Now we did get a strong looking hammer candle around there, so you have to be a little bit careful, but It wasn't particularly precise. And that's good to know. If you see price either direction, especially a little bit further down, then we know the next level tends to be the 1.618 here at 29.58. So that suggests that, yes, there may be more downside to come. So it's a very tricky one with oil because there are so many factors involved, including control of supply, unpredictable demand, seasonality, new government stimulus, and other government plans and announcements. So let me know what you think in the comment section below. I will do regular updates on oil from now on also. Thank you very much for listening.